Trading it.
Pretty good, thank you. Hey, Scott. Hey, everybody. Yes, Andy is probably skiing down a Colorado mountain as we speak. He's off this week, and I'm going to fly solo today, but I've got a lot of good things to talk about. And as you heard, Chris Farley is in the questions panel, so he'll answer some questions so I can just kind of focus on what I want to talk about, because I think we do have a few good things to talk about today. Just a reminder, the disclaimer, trade of the week. We're a software as a subscription company. I'm a trader of my own accounts, plural, and I also happen to be an employee of Trade Ideas. So I'm going to give you some of my ideas and what I see out there, but it's my personal opinion only. It's not the opinion of Trade Ideas, and certainly should not be construed as a financial advice. You got to seek out the right brokers for that particular one so they can charge you a fee. All right, we just came off of a big test drive, which is one of the reasons I have not seen you guys in a while, because we always cut the afternoon webinars during our test drive to focus on support during the day. But it's good to be back. And just a reminder, as people file in here, which I see they still are, it's a very intense platform. Let me share a quick story with you. I was talking with a TikTok guy who was interested in the product, and we sent him a link, and he clicked into it, and he said he was a little intimidated. It was a bit overwhelming was the word he used. It was overwhelming. And then after I spent 30 minutes with him and showed him a few things and showed him the possibilities he can pull from that our platform to make it suit his style, he said, okay, well, I'm still overwhelmed, but I'm overwhelmed in a very good and eager way. So we recognize that, and we want to try and get everybody that type of help to shorten their learning curve and get them overwhelmed in an eager, good sort of a way to see what this platform can do for you. And so just a reminder, every day, Monday through Friday, Barry's live trading room. He's opening up earlier and earlier these days, and for a good reason. But if you want to be there with him, it's free and doesn't cost you anything. And the stuff they're talking about in there and the things they're trading, those are definitely worth a premium type of Discord that some people are out there paying 80, 90 bucks a month for. So Barry is a great asset, not only for trading, but learning the software platform as well. And then every single day at noon Eastern, one of us gives him a break and we come in and we just take questions. That's all we do. We take up questions from the users overnight and visually give them a demonstration. Same thing at 3:30, you can see down here. This is when Chris takes over at 3:30 Eastern in that same feed at the end of the day, just to give people after the bell a chance to come in and get some more visual instruction. It's really the best way to learn this product is a Q&A visual instruction. Telephone support just doesn't really work for trying to learn the product or support. So you've got that, and you've got the daily support sessions. And if you don't know how to get to the daily support sessions, there is your link right there. Just add a /live on the end of our URL, and you'll find the live trading room and those 2 sessions daily. Stock racing, I'm going to talk a little bit more about this today, but we're just really trying to remind people that there's a whole new way to visualize data. We're trying to really demonstrate that to create value. I'll talk, like I said, a little bit more about that in today's presentation. That's an old chart. We did the test drive, but just so you know, our next test drive is probably going to be mid-May. So we're looking at like 3-month intervals. So the next test drive will be somewhere around mid-May. And then our most recent ebook was written by our chief technical officer here, the guy behind all the levers, Dave Mabe. And he gives you a free look at his approach to the market and his strategies. Dave Mabe, good guy to have on your team, and we got him. All right, so here we are again. Like I said, I think it's been 4 weeks. I think it has. It's been 4 weeks, but just the reminder to kick us off. As always, your best bet in success right now is man and machine. I don't care if it's the financial industry or the medical industry or energy industry. Technology and algos and AI and machine learning are giving us, the human beings, we're still better than them, but they're giving us the best information to look at and letting us make the best possible decisions with the cream of the crop in the quickest amount of time. And that's really what we continue to try and strive for around here. So if you're doing this on your own without a machine, you're behind the curve. If you're trying to let a machine do it for you and turn your back on it and not supervise it, you're behind the curve. You need to be a human and a machine working together, a symbiotic relationship. You just really cannot compete with that. So here's an agenda for today. I'll go over the AI recap after the market recap. A lot of good trade of the weeks to talk about, and we'll talk a little bit more about visualizing that data and using the race cars. We'll take a look at the sectors, and as usual, we will finish with you guys, just giving me half a dozen or 10 or so stock symbols that you'd like me to look at, and I can give you my unvarnished truth of what I see over there. So let's zoom out and start here a little bit with the S&P. I'm just going to go ahead and say it. We have a different animal now. If you guys have been with me for a while, I just kept saying there's no bear case to be made here. It's just a big trend. We had a little bit of a hiccup there, but then something happened here in January. We broke that uptrend. We broke that 50-day moving average. Then we broke the 200-day. And what you may have heard some of us say that some of the most vicious, incredible intraday rallies will occur when the market's rolling over and shifting into a seller's market from a buyer's market, because a certain part of the public out there hasn't quite figured out that buy the dip isn't working anymore. And so you get these giant spike ups in a single day. There's one there. There's two of them there. This was the big one we had last week. But they seem to just keep running into a brick wall, which is now forming a downward sloping moving average. Not good. We're no longer buying the dips at the moving average. We are now selling the rips at the same moving averages. This 20-day moving average in red looks like it was the one that really caught the attention of the SPY and threw it back down back below 420, which was kind of a big level that we've been watching. So this again is not a good 7 or 8 day pattern. Gap down, come up right into the armpit, as I call it, and then the sellers jump on and pile on, and then we probably are going to be testing these lows again here pretty soon. So I'm now going to flip the card and say there's no bull case really to be made as far as I'm concerned. If there was a bull case to be made, it would have been right back here. We would have built off of this push higher, consolidated, and then started working our way back higher, but we didn't. So that tells me we literally are on the other side of the mountain now. We are in a seller's market. I'm not going to call it a bear market, but I'm going to call it a seller's market, because you get these intraday moves. Remember that intraday move we had today? Remember when that meant something? It doesn't anymore. When you see these are, again, the quick rallies that we have of people that are in fear of missing out, thinking that they still need to buy the dip, and the professionals and the masses just come in and just hammer that bounce, and they sell the rips. So guys, we are no longer in a buy the dip market. We are in a sell the rip market, which means one of two things. You either have to get better at learning how to short, or even buy, inverse ETFs like the SPXS or the TZAs, and try and play the short side, or play stocks as they bounce up into their moving averages and then fade them. Look at Tesla here. It just can't get above this 20-day moving average. So when it bounces up, the smart players are now fading and selling in and establishing a short position. Do not short the market down here when it breaks down, and fade and chase the market down into the hole. Don't short in the hole. They're just going to bounce you out and make you feel silly. You're going to want to reload up here. So no other way to put it. We're on the other side of the mountain, as I said. The buy the dip is no longer working. And I said there was two ways to play this market. I forgot about that. The second way is to focus on what is working. Fortunately for us, we nailed one this week in the solar market, the oil market, the coal market last week. So there's always something, like Jim Cramer, I curse myself for having even mentioned his name. I'm not a fan, but he says, and I'll give him credit, there's always a bull market somewhere, and he is right. And so we'll get into that with the last few trades of the week. Thank God we've been focused on the right sector, because let's face it, these last few weeks have not been kind to the dip buyers and the people holding on for dear life. It's just day after day pain. So the Nasdaq, same thing. The Qs could not get above their 20. So right now I'm starting to look at this 20-day moving average, just like the S&P. This is the line in the sand that the sellers are now leaning on, just like the buyers were now leaning on the way up in buy the dip. Really not much to differentiate between the three. It looks like the IWM has tried to sustain the most sideways action and not make new lows. That's interesting, but I'll tell you, if these SPYs break those recent lows down here this was a very definitive day. This told me that, hey, we might be done shorting for a while, but let's see how it plays out. It tried to, and then it gave it up the last couple of days here. So I think we have a date with this level, which again was a very psychological big level for the buyers who did buy this dip. If this thing breaks and gives way, you know, you're going to have all these people that are like, oh man, fool me once, shame on me, fool me twice, shame on me again, I got to sell again. And so it starts to feed off itself. Just beware of that. And please be aware that the buy the dip is not working. And these intraday rips higher generally are going to be faded by the end of the day in a seller's market. Again, I didn't say we're in a bear market. Maybe we are, maybe we're not. All I know is the dynamics have changed. We are in a seller's market. You better learn how to short and fade the up moves, or learn how to find the right sectors and stay afloat in them. What does Apple look like? It's always interesting to see what Apple's doing, just as kind of a market barometer, same kind of a thing. Yeah, all the charts look the same. They've given up their moving averages and they're now being suppressed and held down by the moving averages as opposed to being held up. All right, so this is normally where I would say hi to Andy and let him take over for me, but we're going to continue on the theme today. The theme today is visualizing data, focusing on the winners. All right. What a great day the AI had today, especially for people who are just trying to buy the dip out there. Now, I know not everybody auto trades it, and that's good. I think this should be used honestly as a tool that's simply just another idea generator, just like a A window or a T window. It's an idea generator. I'll go through a couple of these in a moment, but one of the things that we're starting to talk to the users about this AI strategy trades window, if they're trying to take some of these trades and maybe get out and get back in, you don't want to lose track of the winners, the ones that are working. So this has always been here, but I want to remind you guys, this little drop-down menu here called filter, it really does kind of help the psyche. And as a trader, the better you can keep your psyche happy, the better you're going to do. If you start to get wigged out and emotional and see a lot of things you don't want to see, it's going to distract you. Not good. So a neat little trick that we've been doing when I look at the AI trades is I'm only wanting to watch the profitable. Now, I'm not saying cherry pick and show me the profitable ones, because we still calculate all of that over here in the main AI window. Nothing changes. But if you're somebody who's watching for ideas and looking to the AI for real-time ideas during the day, I would suggest to you, and we all would suggest to you, that using this filter for only profitable trades is going to keep your eye focused on where the action is. And that's what we're trying to do. We're trying to get away from this grid pattern of what do I do with all of this numbers and get overwhelmed with all these symbols and numbers and grids. And we're trying to get away from that. And some of the early things we're doing, again, is try and remind you, you can focus on the profitable trades only. We're not cherry picking them, but we're only giving our eye and our psyche. Is that TGB? Is that what that was? Uh-oh. That's okay. I'll get back to that one. Okay, so first thing, like I just said, if you like looking at only winners, you don't want to see the losers on there, just go ahead and hit profitable trades. And again, this is not for auto trading. That won't save you from anything. But if you are using this as a discretionary scan to try and figure out what you want to focus on today, you should be focusing on these names. And secondly, you should be probably focusing on these names by clicking into them and maybe even putting the heart on the symbol on the chart. What does that do? That loads them automatically into your My Liked list, which everybody can get a copy of on the My Liked channel. Just using the heart will bring those in and out. So all day long, sometimes people ask me, what scan are you staring at all day long? Well, it's not so much that I'm staring at a scan all day long. I'm staring at my liked symbols. I want to see the stuff that is in my wheelhouse that's been in play for the last couple of days. And that's the My Liked symbol top list is a great tool to do that. So that's first and foremost. What else did the AI tell us today? I've always been kind of a big proponent of, okay, now when we do sort by winning trades, right? We see that the AI gave us an incredible directional bias hint today. It was ribbing us in the ribs with the elbow saying, you might not want to be going long today because most of the money is being made on the short side over there in the AI, which is statistically probable type trading, unemotional. That's the key, unemotional trading. So keep an eye always out for a directional bias. If you were somebody who was really trying to fight the tide and buy dips today, it never hurts to look over and see where the AI is finding success. That will certainly help you. And then as a couple, I always love to just go through and talk about managing the AI trades, because some of you know that I religiously use the 10-period simple moving average on my 15-minute chart, and it always tells me a lot. So in this very first example of the trade today, giant gap up, it was a sell order. Okay, sold before it filled the gap. And then the first order of business was, yeah, break that moving average and show us that it doesn't want to dig in there and move higher. So that was a beautiful break. When you're short these things and you're above that 10 SMA, if the AI calls it out, first order of business is get that price back below the 10 SMA, because look what it did right there. Bounced up and it found resistance. So you had a really clean one bounce move all the way down to lows in that particular one. And again, we're just kind of referencing the price in relation to my 10 SMA. Okay, so this was a short that was established right here. Boom, first thing it did is it went down and blasted through that 10 SMA. That's what we want to see. We want to get under the 10 SMA for the shorts. Another short, but I think it got out a little early. Yeah, this one's interesting. The AI got out early with that buy tag on a profit save, and then it stayed in play, and then boom, it bounced right through that 10 SMA. And you can see once you lose that 10 SMA, you're probably going to lose the price momentum for a little while. What else was in here? Another beautiful example of a short right at the 10 SMA. Beautiful. Underneath it, came right down, bounced, and could never close back below the 10 SMA for the remainder of the day. This is how I would be managing the AI trades, you guys. I'll do one more here, then we'll move on. If I had short sold STX today, I would have been watching and I say, I am not getting out of this trade until the price gets back above and closes a 15-minute candle above that 10 SMA. It never did. Did exactly what we like to see it go back to lows, sideways, sideways, and then boom, hits that 10 SMA and it hits it right over the head and sends it lower. There's probably one good example with a long. Let's just make sure we can find the long. Yeah, there's the RCI. Okay, SGLY, great example right here. Here's our buy, went up, came back. Look how many times it tested that 10 SMA, all the way up here to almost 7. And then what I always say is my signal candle is the very first candle that breaks and closes. I'll say that again. It closes below the 10 SMA. And look, if you had used that closing price right there around 670 or whatever and said, nope, that's my signal, just like Steve says, the momentum is probably broken once it closes below that moving average it has been respecting. If you'd used that, it's a nice early warning system to get out and not hold on with a deer in the headlights. I see somebody's having trouble seeing the screen. I'm sorry. I think everybody else is doing okay, so it must be something on your end, Ram. I'm sorry. All right, so the AI takeaway today, don't forget short or long bias. Today, the AI gave us a clear signal of what the path of least resistance was and where the currents were flowing. Don't forget, if you're just mirroring the trades in here and looking for ideas throughout the day, you can check that profitable box only, and it shows you only the ones that are working. Are they all going to work every day? No, of course not. We would never even try to explain that. But we want to get people focused on what is in fact working. And so that's another great example of how you can manage the AI. Because like I said, it's very, very psychological in trading. You get a couple of bad trades and you get a little discouraged and you start seeing the things you don't want to see. It gets into your head, and you want to have a good head when you're trading. This could probably be a good question, Jonathan. If you're looking at the 15-minute chart and Holly gives an alert during that candle, do you want to wait for it? I would say you're probably best off taking the AI alert, Jonathan, when it gives it, but just always be cognizant of where that alert is. Now, if you were to look at some of these charts that were discretionary short, and you said CL, I really like that one, but look, it shorted it up here and it's above this moving average. I think this is probably what you're focused on right here. Should I wait until I see that break? No, I would just take the entry it gives you and then observe that area as what we call a level of interest. There's no guarantee it's going to bounce. There's no guarantee it's going to go through. But once it gives us that information, that's where we do better than the AI. We have more information that we can nuance and discern in real time that the AI never had. No guarantees of trading, that's right. All right, I want to move on here. So let's move on to the trades of the week. Again, it has been a few weeks. I'm going to do these in order. I'm going to go way back to BTU. This was a one that we were in and got stopped out of, but BTU, there's no reason why. Remember, I went over the Easter eggs concept with you guys a couple months ago. Take all the symbols I give you and the ones at the bottom, the also watch, pop them into a list so you won't lose sight of them. And again, this becomes your wheelhouse for the day. You know, when you're focusing on a dozen or 2 dozen stocks that have been in moving and in the news and in play, you don't need much more action than that. You don't need to build the perfect alert to come out and tell you what to do when you want it. Now, don't get me wrong, certain people do that, and our platform can allow you to do that because it's that powerful. But for me, I want to keep things simple, and I don't want to have things just coming at me in a fire hose. I want to be able to read this stuff better. So BTU, if you had kept that on your radar, which I did, okay, made a little money back here when we called the trade of the week, and then it broke down. But I watched it again on this day. Matter of fact, I actually remember, it's so funny. I remember, I don't know if it was the trade of the week group or the Wednesday group. I remember saying, oh, I'm so mad I missed that setup. Look at that setup. Beautiful sideways action into the 10 SMA, tagged it, and boom. I'm so mad at, well, sometimes the biggest blessings you get in life are the things you didn't get. And in that case, I laughed at myself the next day and I said, you know, if this thing trades down to the 20, I'm going to buy it back. And I did. It was not a trade of the week, but it was just a secondary trade around that I had on my my watch list from before. I got a beautiful move out of that and loaded up down here. I sold half about there, sold another quarter there and another quarter there, and that was about it. Not even looking back. So hopefully some of you guys had BTU on your watch list from the trade of the week, you know, 5-6 weeks ago. Is Easter eggs? No, Easter eggs, Jonathan, is just me creating a high low, which you can do. You can't have my actual strategy because it requires a symbol list. So if I go to configure, it's just new highs, new lows. You see that? And then in my symbol list, I have created a list called Easter eggs. And I have enabled that to only show me new highs and new lows on the stocks that I want to see. And of course, you do that up here in Tools, Symbol List. You can start from new and make your own Easter eggs list. You can go back and start adding stuff in there. Or you can just pop them into the my like symbols, but that's a top list. It doesn't tell you when it's making a new high. We'll get to that whole concept in a minute. Okay, so let's move fast forward. One more week was GDX. This one was a weird one, you guys. This one was the one that I said, we don't want to chase. We want to wait for a pullback. And the pullback was pretty much right there. The trade was called and it opened up right here. Now, hopefully some of you guys didn't buy that and you read the content of the email that said, this is not a buy breakout chase. We want this established trend that's been building here in gold miners to pull back and give us a nice entry, try to time the jump rope. Well, it didn't do it, but it pretty much did it the end of the day and then the next following day. So that was a wonderful entry as it turned out, if you took it. And not only was it a great entry because it worked, but it was a great entry because we didn't buy the breakout this time. We waited, and ideally, hopefully you sat here and you did what I did and you set a price alert and you waited for that price alert to hit. You're off doing other things, answering an email, chasing another stock, and all of a sudden this thing splashes up and say, hey, price alert, it's time to buy the trade of the week. So hopefully maybe some of you were able to do that. GDX worked very well. Probably want to be selling a little bit on the way up, but no reason to get out of all of it yet, for sure. And that brings us to probably the best 5-star trade of the week I think we've had in a very long time, which was ARCH. Again, this is the sector, as I mentioned, oil, coal, gas. Doesn't matter what you think about coal, the market was warming up to it with all the news out there. And this was a funny one because I actually bought this one back here, like during a midday session. Somebody asked me about the A-table scan. And I said, yeah, the A-table scan. Well, Arch, wait a minute, that looks really darn good. And so I bought it and held it for a day. That was back here and traded it and thought, boy, this thing gapped up and then it came back. Oh, this is getting really interesting because nothing has changed. What I mean by that is the float is extremely small, 14.9 million shares. That's a very small float. The problem is 36% at last survey. It's probably lower now, but at last count, over 1/3 of the people were on the short side of this. And that is what gave me all the confidence in the world to look at this and say, wow, this thing is extremely ripe for a short squeeze. If you don't know what a short squeeze is, it's when the short sellers have to buy to get out of their painful position that's going up against them. And when you're buying to close the position that hurts, you're also competing against people who are greedy and FOMO and trying to get in. So it becomes a perfect storm of buying with not a lot of selling over the course of a few days. And that was my wildest dreams that the short squeeze on Arch would materialize quickly after it was called. And when you know it did it, this was a beautiful look right there. You know, if you can put something that's just moving sideways, upwards and sliding along, and then happen to notice that 36% of the people are missing something here. It's a really good looking chart. What are they missing? Let's buy some and stick around and see if we can exploit their pain. Well, this was day one. I would call that day one. Day two, day three, then had 4 days of blow off. Now, normally after you see a blow off candle like that, you're going to see a retracement in price, but we're not seeing that. We are seeing a sideways action. And unless this cleans up and gets down into the 20s, meaning the short sellers have taken their lumps and gotten out, this thing could be setting up again, you guys, for another one, okay? So keep an eye. If you see at any time ARCH maybe just drill down on the open, a crazy, horrible, like BTU did yesterday, right there, driving all the way down and then popping back up. Well, if you set an alert, what you could do is you could maybe set an alert in Arch, maybe eyeball it. You could come in here and say, well, you know, maybe right around there, if the moving average and the price converge, I would like to know about that and keep it on your watch list, because there's nothing that says we can't reload and try and play with this thing again. But this was probably the best 5-star trade because everything lined up. The chart was perfect. The short float had explosive potential. The float itself was very small, which gives it explosive potential. And the story was there. The Russian, the oil, the energy, everybody's talking about it. So these people had no business being short this thing, and we exploited them. And hopefully you guys got a piece of that. On to today. Staying in the line of energy, we moved on to solar. So this is what CSIQ looked like going into the weekend. We looked at a few of them. We looked at First Solar. First Solar was still below some of its key, FSLR, Steve, was still below some of its key moving averages, where CSIQ just seemed to have the cleanest breakout and sitting above its moving averages ready to go. The buy point on that one was, I believe it was like 31.18. I can't recall. Let's take a look. Arch, CSIQ, 31.14. So 31.14, the price gapped above our signal price. Let's go to that price yesterday, okay? So there's 31.14 right about there. It gapped up above it. Now, I don't really know what to say on these gap ups. I've mentioned you got 3 options. You can buy the open and pray that it keeps going. You can wait and see if the 10 SMA comes up to catch it, and you can buy it at that, or you can wait and see if it wants to fill the gap. I don't think filling the gap was probably in the cards on this one, but you know, maybe chasing at the open or buying at the 10 SMA was probably the best you were going to get, just barely under 32 there. It did come back at the end of the day. Maybe some people were watching it, decided to take an entry on that, but it gave us a perfect doji yesterday. But the point was it closed above that downward consolidation. And then today it just found its groove. Look at the solars here. The solars up 10% as a whole. So a really nice move. Now, what am I going to do with my CSIQ? Well, probably going to be look to start selling some of it tomorrow. All right. You've heard me say, maybe some of you have, some of you haven't. A day and a half is really the most that you get around here. Brad here at Trade Ideas was along Sun W, and he asked me earlier today, right here, he said, what should I do? And I said, sell half. Sell half and let the other half ride and hold that 10 SMA. And then as soon as it breaks that 10 SMA, you want to get out, because a day and a half seems to be all we get for momentum. So yesterday was day 1 in Sun W. Today was half a day, and there you go. The people, they want to take profits. They're itching to take profits, so that's why we get those down in the middle of the day. So tomorrow in CSIQ, I fully expect to have my finger on the button. If we can get a nice push on the opening drive, I will probably sell half before lunch. And I'll do the same thing. I'll trail that other half and see how much I can squeeze out of that on the intraday 15 chart. But guys, we just went through 3 really nice charts. And when you put those against the backdrop of this mess out here, I'm pretty pleased with how the last few trade of the week ideas have worked out after kind of a slow 4th quarter back there, admittedly. So any questions on those, then I can move on. A table, yes. Let me get you guys the A table. Chris might have already even done it, but I'm going to drop the A table into the chat window for anybody that wants it. It's just a simple scan that looks for strong charts, but also has a high float percentage where the people are missing something. Okay, and what do I mean by strong chart? Nothing more than stock composite rating. I've got it set to 75 now, kind of a C student, C plus student. So anything above a stock composite rating of 75 should be giving us a decent chart. If you want to move it to 80, you can do that as well. You know, Arch was all the way up in the 90s, so that one worked out perfect. So I will drop the A table into the chat window for anybody who wants it. And that's on the GoToWebinar little tool panel there. Let me just back up here, make sure I didn't miss anything. Yeah. Good for you, Jonathan. Glad you did that. Are you just setting alerts for symbols in the A table to pull back? Yeah, so I'll just see something that I might be interested in the future. So it's not just the A table. I mean, I can find something over here. Like, you know, if I really want to get into Newmont Gold, you know, I'm not going to chase it up here, but maybe I can eyeball it and say, you know, if it comes back down close to this moving average, I'll just try and guesstimate where it could be, where I could be interested. So you're never, ever going to see me chase a chart like this. You're going to see me try to anticipate a chart like we did in GDX and get those nice movements. But once it's made its move, it's over. You don't want to chase. You want to wait for it to regroup. And so I use that price alert to try and just give me an eyeball approximation of where I might want to see that alert, Jonathan. Hopefully that helps. Okay, let's see here. One more thing I want to do. Okay. Just going to run this little 2-minute race here. So you guys see in the morning, I'm going to show you this scan. It's actually an Andy scan, I believe. The action is heating up. So the open, market's open for 15 minutes or so, but we've got this top list. What the heck are we supposed to glean from this top list? There's nothing moving. That's where the cars come in. That's where the race comes in. It gives us a real-time look, and these cars are going to start updating even faster in the newer versions of what is moving. So right now, my eye is focused, instead of that whole giant top list, it's focused on these guys up here, MARPS and CEI. There's no guarantees that they're just going to keep going, but this allows me to filter out all the other noise that's not working. And, I know Chris is here and I know he's on mute, and I'm going to speak for him because he has said it, that this setup in the early morning, the first half hour of the day, has given him more decent day trading setups than he has in a while. So this new tool is really being embraced well by the day traders, including Barry. Of course, he's running stock races there all the time. But Chris literally said it's been helping his day trading. I'm not a day trader, I'm a swing trader, so I don't use the cars as much as the active guys do, but you can see real easily here how much this idea, just like my whole theme for tonight's webinar, has been visualizing the data in a much better way and focusing on what's working, kicking out what's not working. There you go. Come on in, Chris.
What I try to tell people in the 3:30 session that I'm doing is I used to be the king at buying the last new high of the day. So new high alerts just don't work for me day trading. I've been beat up too much by it. But what the stock races do is they point me at what's really, really moving in the morning. And I look at some charts that look like they're interesting, could have some room to run. And I set some price alerts, a lot of pullback alerts like that. And I let the price work back to me. If I get the entry, great. If I don't, so be it. But it's completely changed. Instead of trying to chase the momentum, I let the momentum kind of come back. I see where the momentum is and let it come back to me, essentially. So, I'd like to push the 3:30 sessions. I share the couple of races that I use. They've been, going 2+ months with these races. I've been doing very, very well. Once is a happy accident, over 3 times now, I've got a trend going. So,
but the important thing is it's highlighting your focus and your attention, which we only have a finite amount of each morning. It's focusing and highlighting your attention to the right space.
That's exactly it. Okay, back to mute. Thanks.
All right, so that's really all I had on that topic. Was I wanted to remind people that whether it's the AI or that 2-minute race, it's AI profitable filter, right? It's going to focus us on the winners. We want to be in the best mental state we can. And sometimes seeing a lot of red blinking lights that are working, that are taking away from our focus. Certainly, if you're in the trade, you should be following them. But if you're looking for ideas, take the red ones off there. Let's see what's working. And then you can look for those pullbacks like Chris talked about and I talk about. And to answer your question, Stuart, yes, the 10 SMA is valid for me. All I care about is the daily chart and the 15-minute chart. It doesn't seem to work well on any other time frame for me. Now, Michael and Chris, they like to use the 8 SMA. So it's all, half dozen of one, 6 of the other. It's your own preference. And my preference is to just use the 15 and a 10 SMA. All right. All right, so here's what I'm going to do. I'm going to go through the sectors now. As I said, the market has taken a bit of a beating. And let's see what sectors are holding up out there. I think we kind of know ahead of time, but maybe there'll be some gems in there. And usually I can highlight 1 or 2 sectors that you might want to keep on your radar for tomorrow. And as I do that, you guys are welcome to type in single stock names that you want, and we'll close out the session by looking at some names. And I'll tell you what I'm thinking about them. And it always helps to know if you're long or short or getting long or thinking about getting short or where you are. Not that I have to assume you're chasing it. So we're going to start solar. We know that. I expect follow through tomorrow. Just like I said in CSIQ, the trade of the week, I expect follow through tomorrow in solar. I'll be looking to take some off. I will also be looking, let's see, the TAN has got its 200-day moving average right there. So that's getting close. I think TAN could have a good date with the 200-day moving average on some good follow through tomorrow. The good news is our trade of the week, CSIQ, did in fact make it through, and it looks like maybe it could get up here into the high 30s tomorrow. Then I would be a real aggressive seller. I don't want to stick around for too much. Okay, airlines. Precipitous fall, oversold, definitely oversold in the airlines. I don't know. Everything's guilty until proven innocent right now in this seller's market. So it didn't close on highs. That's not really a great thing. Silver, I've been long silver for over a year. You guys know my stance on that. The story is finally starting to shape up with gold miners or with gold and silver and inflation. And obviously oil and inflation and things like that. So inflation is becoming a real household term right now. That makes sense that gold and silver is doing well. As I said earlier, I would not chase these type of moves. All I'm doing is looking for a possible reset of the jump rope where we can come in and maybe find a spot that the convergence of the 10 SMA will work well with the price. Oil service is going to be doing strong. Again, these ones at the top today are probably doing some blow off moves here. That's kind of a blow off wick top over there. I'm looking for something that's more consolidating and really hanging in there. Let's see if we can find anything as we move down the sector list now. I see some of you guys popping in single stock quotes in there. I'll take a look at that as soon as we get through here. Boy, if it's not oil and gas and commodity, something you can drop on your foot and say, ouch, it's just not looking that great. K-Web, China, might be a bottoming tail, maybe good for a day bounce, but I don't like to play that game, honestly. I'm seeing a lot of deterioration in these sectors here, the undercurrents of what we're seeing in the SPY and the Nasdaq. I would say IYR, but it just kind of gave way today. It was trying. If it had looked like that, I would have been all over that and say, hey, that looks pretty good, but it's just kind of bleeding back down into its averages. We've done those. Wow, I really can't see anything. SLX, okay, so steel, you can drop that on your foot. That's a commodity. You might do something like this, okay? You could take the XLS and you could just pop a price alert right there, right where we know the 10 SMA to be tomorrow. You could say maybe a CLF. What does that look like? Yeah, let's put a price alert right there and CLF at the 10 SMA and X steel. Perfect. One more day of selling into that 10 SMA. And if those go off tomorrow, I would consider maybe buying some steel. You're not chasing the blow off. They're probably a couple days ahead of gold, but we're doing the same thing. We're looking for our pitch. We're looking for our price. So steel is really the only thing I see of interest, and it still needs to pull back a little bit. Maybe the gold miners could pull back a little bit too, but it's a crazy market out there. It's nothing like it was 6 months ago, guys. So if you're having trouble, pull back in your size, pull back in your risk, use the simulated trading thing more, You know, I use it to mirror in one of my accounts, but you know, still keep on top of it. You can use that to practice all the stuff that you're trying to do. So really nothing other than that for tomorrow, my thoughts. All right, let's take a look at what you guys want to look at. The first one, where did oh, I lost my stream here, hang on. First one, it looks like is TSLA, Tesla Long. I pulled that one up as an example earlier to say it's under pressure, and it is. So what Tesla needs to do is to stop being dominated by the 20-day simple moving average. That's your bogey right there, Shannon. If Tesla can post a closing candle, because you can see along here, there's a lot of nicks and attempts, maybe a small attempt there, but no real definitive closing candles above that 10 SMA. Okay, that's the first order of business. Once you see that, then your next order of business is going to get this thing back above the 50-day SMA in blue. Currently, it's fighting to hold its 200-day. So Tesla technically is under pressure. It's kind of guilty until it proves itself innocent, but that's what I would key off of, that 20-day moving average in red. Okay, so Dave's been long for a week or so on USO, Exxon. So, you know, you probably should have been taking maybe little profits along the way. Perfect doji in USO, you know, that could fare well as a candle recognition. That could very well be a blow off top as well. We could come in tomorrow with some weak overnight prices because you're just playing musical chairs when you're up here at the price and the 10 SMA is down here. At some point, there will be a reversion to the mean and drive that down. So just be aware of that. And if you're looking to take intraday profits, you would use that 10 SMA. I imagine these other stocks you've given me are going to pretty much look the same. Yeah, today's candles look a little bit like blow off tops in them, Dave. So if you haven't taken some off already, you know, be very vigilant. Don't let yourself give too much of it back. Same perfect doji in DBC. There's no reason that can't be a blow off candle as well in DBA. Yes, I'm just hoping you've taken some profit. This one hasn't done much like the others, but keep those other one tight because you can always reset. You can always just go back in and set a price alert like I did in those gold miners and those steel stocks. Oh, any more? That was it, huh? Anybody else want to talk about any other charts out there? Got a minute or two. Let's look at some of the also rounds I gave. Watch First Solar, ENPH, CTVA. CTVA didn't do anything. Friggin' fake out is what that one did. First Solar did have a good day. And ENPH, I believe, had a good day. Is it EN or E? Yeah, ENPH. Also a, gosh darn it, it just froze up, which is also a solar name as soon as it comes in here. ENPH. Here we go. All right, ENPH had a good day as well. That was on the also round. So these are the names that I was talking earlier. You want to kind of pop into your Easter eggs high-low and keep track of these things. The last one, RKDA, this one might be a sleeper. Okay, I've been in this one for a little while. This is an agriculture play. And another trade of the week that we had a few weeks ago was CF. It took its own sweet time, but look at that. Agriculture, it took off as well. So RKDA is just kind of one of my own little sleeper stocks under $5, under $2. It's kind of wacky, but look at that volume that's come in lately. Don't lose sight of this one. If I were you guys, I'd put a heart or maybe even, you know, price alert on there to keep track of that one. All right, great. So we got two more stocks, and then we'll bring in Scott to finish out here. Good questions today. MTCR, what do I think about this one? We can see that the 50-day moving average has been dominating so many things in a downtrend. When they try to break out of a downtrend, the 50-day moving average has something to say about it. So you're being squeezed and pinched back down into these two moving averages here. Whichever way it resolves and closes, not wicks, but resolves and closes is going to tell you what it wants to do. Chances are it might want to follow through to the upside, but sometimes it runs into that 50-day moving average, has to pull back, get some more steam in the tank, and then push through. And the second time might be the one for you. All right, last one here for Jonathan, SDGE, SEDG. Yeah, Jonathan, this is Solar Edge, great solar stock. You're in the right you're in the right neighborhood. You know, this looks a lot to me like CSIQ did, doesn't it, Jonathan? A few days ago, CSIQ a few days ago had those 3 nice days of pullback, and then it's right there. So it almost looks like it could be a day behind. I like this one, SEDG. I assume you're already long. Stick around this one for some to see what it's going to bring tomorrow. I think it could go to 350 tomorrow on an early morning push. But remember what I'm going to do in my CSIQ. I'm going to be looking to probably sell half on an early morning push, and then I'll trail stop the remaining half on my 10 SMA. Great. All right, I'm all talked out. Scott, come on back in and make some announcements.
All right, yeah, thank you, Steve. We'll hit up a couple things on our way out, as soon as I can find that portion of my screen. We do have a direct connection with E-Trade through our Brokerage Plus app. We have that integration going, and you can trade commission-free through E-Trade. So if you already have an E-Trade account or you're interested, go ahead and give that a try. You can connect them directly to your Brokerage Plus module within Trade Ideas. Just go to trade-ideas.com/etrade and learn a little bit more about how it works. Also, don't sleep on Interactive Brokerage. They have one of the best short lists available. We integrate directly with them through Brokerage Plus, just like we do with E-Trade. So go to trade-ideas.com/IBKR and head over to the E-Trade site, sign up if you don't already have an account, and get yourself automated through Brokerage Plus. Use the code MARCHON to save 15% off any month or year of Trade Ideas subscription. You can also use that to upgrade from standard to premium. So if you feel like getting those premium features, go ahead and use March On during the month of March, save 15%. You can find us on YouTube at Trade Ideas at youtube.com/Trade Ideas. You can also find Steve on Twitter at TISteveG, also at Trade Ideas. And if you follow those handles, you'll find some of our other ones. Email us at info@trade-ideas.com if you have any questions or missing any of the links that were given out, or just want to find out some more info. The recording of the session will be up tonight or tomorrow morning on our YouTube channel, and you get an email reminder from GoToWebinar with a link to the playlist where you can find it. So thank you, Steve. Thank you, Chris. And thanks, friends, for attending. See you next time.
All right, see you next time.